I just sold half of my position out of SPXL to buy 4 new trades. I am a professional investor. I am competing in the US Investing Championship, like it says down below. And I'm going to show you step by step by step how I found these trades. And if you watch, you will be able to follow along and see how each one of these trades plays out. Now, as a professional investor, I understand that I have no expectations on these trades that I'm about to put on. I don't know if they're going to win. I don't know if they're going to lose, right? I'm not the YouTube jokers out there trying to sell you a course, trying to tell you everything that, hey, this one stock is going to go to $75. $75 and this stock will go make you a millionaire. All that crap. None of that is true. None of that matters. All you need to do is have a documented plan that has an edge and then exploit that edge. And that's exactly what I'm going to show you today, what I am doing. And like I say, I am competing in the US Investing Championship with these trades. Joe, I'm glad you're here, my friend. Do me a favor, Joe, as we run through this, will you update the Discord so that those who are watching and those who are following along in our Discord will get the notification for these?
Absolutely.
Let's make it happen. Let's make it happen. All right. So first things first, I have been in SPXL since 2/26/22. But I need to put on some new trades. Now, before I actually sell, and all of these trades will be done here live in this video you're watching in the Outlier Fund. This is the fund that we set up just to trade the US Investing Championship. We need to get through the process of figuring out what and how much we need to sell out of this. Okay. So let's start at the top in our PowerPoint here. Welcome to the Outlier Trading Room. This is the US Investing Championship invitation only live stream. This will help you save time, make money, and start winning with less risk. So go ahead and subscribe if you haven't already and you're watching the replay. So we have 3 plans that cover a 360-degree, 365-day portfolio. There's Plan M, our most aggressive plan, which is what I got into today. Plan ETF, which is our defensive plan when nothing else is setting up. And then Plan Sit in Cash and Don't F Up Your Portfolio, which is our last resort. Nothing is working. You got to get out of the way plan. Now, before we add new trades, we need to reduce risk before adding them. Okay. So we need to look at our active trades for exit signals because the most important part of the plan is planning on the plan, not going to plan. Now, in this right here, the SPY, so we are in Plan ETF, like I said. SPXL is the vehicle that I'm in right now. Does the SPY have a sell signal? Let's pop into Outlier real quick. Should have had that open already, Joe. We can see that the SPY still has a buy signal. Okay, that sounds good. A 30-day-old order block. Let's see if SPY has a 30-day-old order block it's running into. No, of course not. This is new all-time highs, so we're good to go. Next, does the SPY have a 10-20 bearish cross? No, not today. SPY looks great. New all-time highs set today. And then the SPY closing 3 ATRs above the 20 EMA. Let's add in our value zone indicator, and you can get these indicators that are you can make your charts look exactly the same as mine 100% for free. All you got to do is go into the Discord, go to the FAQ and member contributions, go to the trading view section, and you will see all the indicators right there. That's 100% for free for Outlier customers. Now let's turn off the value zone because we'd be looking for it up there and it's not there right now. So with that out of the way, we don't have a reason to get out of SPXL for the intention of closing Plan ETF. However, we can liquidate some of this portion because Plan ETF, let me back up just a slight second here. Plan ETF's position size is your full portfolio. All right. That is the Plan ETF position size. So because of that, if you were to take on new trades, you would need to liquidate out a portion of it in order to put on those new trades. Now, I'm not going to liquidate everything out of SPXL because I don't have a reason to. If I had a reason to, I would close everything and then start moving into other trades, right? But I don't have that today, Joe. So the next step.
Chris, why would you want to move out of Plan ETF into Plan M? Is Plan M going to give you a better chance of success?
Plan M has a higher expectancy. And in fact, don't just trust me, bro. Let's look at the back-tested data. Plan M has a 56.9% win rate. The average win 7.27%, with the average loss being 4.4%. That gives a the expectancy of 2.25%. This may not sound like much, but this is actually astronomically high. Not only that, but that is just on the stock itself. We're going to apply leverage by using deep in the money options here in just a couple minutes. And then we should exacerbate that into the stratosphere, into the stratosphere. So I'm very excited about this, Joe. But before we get to that point, let's walk through it step by step by step. So we don't have a reason to get out of Plan ETF. Do we have a reason to get into Plan M? This is what Plan M looks like. Now, 40% of the move of any stock is due to the market. Let's go take a look step by step by step through the market. The SPY, the market, having a bullish trend. And we assign a bullish trend with the 10 EMA over the 20 EMA, price over the 50 EMA. So the market right now is trending higher. Hey, Joe, I want to ask you real quick. Why is all-time highs bullish AF?
There's nobody above trying to sell out.
Are you sure? Are you saying that nobody in the history of time who's ever owned the stock and still owns the stock isn't happy at this very moment?
That's right. Everybody's happy.
Everybody's happy. Everybody's happy. Now, Joe, there was a point in time back when I didn't know how to trade where if I saw new all-time highs, I would actually get scared. I'd be like, ooh, I don't know about that. Ooh, maybe I should sell calls against this. Guess what would happen to those, Joe?
Oh, you'd get beat up. You'd get monkey hammered.
I would get monkey hammered all day, every day. Thank you for that cue. So if you see new all-time highs, don't fight it. Don't fight it. That's the market telling you it's a very happy market right now. Now, listen, there's other stuff going on in the economy. A lot of people are struggling in the 2026 economy, but that doesn't mean the stock market cares, okay? You can take whatever biases you want and put it on the stock market and say, the stock market's messed up. The economy's messed up. It has to go down. The only thing that's happening right now is the market going up, okay? Fight it all you want. But how about take the easier route? And that's to trade with the trend rather than against the trend. Yeah, I don't want you to get monkey hammered. Let's continue. So the SPY has a bullish trend. The SPY has a buy signal. We talked about that just a moment ago. The SPY's fear and greed heat map is at what value? That's a great question, Joe. The SPY's fear and greed heat map is at 62.26. Now, how do we find that? Right here, this is the SPY's fear and greed heat map. This value is everything inside of the SPY. The 500 stocks that it's not 500 stocks, it's 509. Shut up. It's 500 stocks inside the S&P 500. This is the average score of those. This is the fear and greed score of the SPY asset itself. Okay. So this is the average of the 500 stocks inside of it. This is the asset itself. Now, if you want, this chart right here actually shows you how this changes over time. So it's getting more greedy, and that's what it shows. Okay. Point is, it's under 70. It's at 62.26 and rising. It's at 62.12 yesterday, 62.26 today. Yes, and rising. Now, under 70 is important. We don't want to get into a market that is too greedy where everybody will then turn around and become fearful. Okay, we're trying to capture the wave up in the greed. And then full stocks breadth. Let's pop over in on the full stocks breadth real quick. And we'll be able to see market breadth right here. This crossover shows that we're getting more buy signals, less sell signals. And the red line right there is the 10 EMA of the number of buy signals to sell signals. Joe, I know I mentioned this before. I actually invented this indicator. I'm very proud of this. I'm very proud of this. There's only very few contributions that I've made to the Outlier platform. This is one of them. Also, one of them that we figured out is the uptrends and downtrends. Now, Joe, the funny part about this is we had this data the whole time. It was always there, but we didn't know how to read it. Last summer, we really deep dove into the platform like, we've got all this data. What does this mean to us? And we found that when there are more uptrends and less downtrends, that is a sign of a very strong market. And so it highlights green or red when there's more uptrends and less downtrends. And if the opposite is true, it highlights gray. Okay. So looking at this, full stocks breadth is bullish right here. Let's move on to the sectors, which is 30% of the stock move. So 40% is through the market and 30% is through the sector. Now, I understand that some people may say, oh, I don't want to get over concentrated in any one sector. But the thing is that you want concentration. If you were trading the Magnificent Seven while they were having their big, beautiful run, right? Would you have said, oh, no, I don't want to be too concentrated in tech stocks while they're running like crazy? No, you'd be like, hell yeah, thank goodness I am inside of all these tech stocks. They are running like crazy. Okay, that is the point. We want to find the greediest stocks in the greediest sectors while the market is getting more greedy. And we want to ride that wave up. And then once it tops, once we get our sell signals, then we get out of the way before it comes against us. Now, I was just showing you the outlier channels right there. And let's go back to that real quick. We have a score of 2 today. a market score of 2. We assign this from all the full stocks. So all the stocks that Outlier covers on average, we're getting more uptrends, less downtrends. So that's a market score of 2. Does not matter what the sector score is. There's also an opportunity if we only have 1. So either more uptrends or less downtrends with a sector greater than or equal to 1 as well. So we definitely have the Outlier channels in place. Now we want to look at a couple other parts right here. You can look at each one of these sectors individually, or we have a new summary view that makes it really easy. So looking at this right here, we're looking for a handful of items. Sector fear and greed heat map under 70 and rising. All of them are under 70. We showed you where to find that, right? If you look on the individual sector page, you'll see that. But you know what, Joe? We can actually do a little bit better. We can pop this open, and then we can actually see the sector fear and greed heat map right there, as well as the outlier channels on the sector as well. So there you go. You can see the fear and greed heat map rising and the outlier channels and the breadth for that sector. Makes it super, super simple. Going back to here, sector fear and greed heat map under 70 and rising. They're all under 70. 2 sectors are moving down. They're getting less greedy, more fearful. So we wouldn't look at anything in communication or financials. So we talked about the sector fear and greed heat map. Let's look at relative greed. Relative greed means the sector greed is greater than market greed. So if the market has a fear and greed score of 6226, which sector has a higher score of over 6226? The material sector. That's 6487. Okay, cool. And then sector breadth is crossed over bullish on the 10 EMA. And that's what this is showing right here. So from a sector perspective, the only sector I would be willing to take trades on is the material sector. Everything is lit up so far. Now, if you're asking yourself, why are some of these gray and why are some of these blue? Well, what's actually really handy is that we call the outlier 9 the best way to determine how the market is acting. But there's a couple other things that don't fit inside of the outlier 9, but they do fit in plan M, and that's what are highlighted blue. Everything gray is part of outlier 9. Okay, so we've narrowed down just to the material sector. Let's take a look at the stocks in the material sector. So this is 30% of the move. 40% due to the market, 30% due to the sector, the last 30% due to the stock itself. Now, the way that we get these is actually really simple. All you got to do is pop over into the screener. I'll show you my exact screener settings, and you can run it this way if you choose to. I'm filtered down to just this sector. None of the other sectors pass, so I don't even need to see it. So I'm filtered down the materials. All the industries are wide open, but you could go into it if you really wanted to, right? You can do copper, gold, lumber and wood, metals and mining, etc. I only want to see outlier positive signal returns, meaning it's an instant backtest to say, hey, using the buy and sell signals through outlier, do we have positive expectancy or negative expectancy? I want positive only, obviously. I mean, you could do either, but I'm only going to look at positive. Capital efficiency. This, in a nutshell, means what is the returns on a per day basis if you were to use the buy and sell signals versus on the per day basis of just buy and hold. So some of these at 4.3% means that every day you invested in this stock following the outlier buy and sell signals, you would have a 4.3x% higher, or I'm sorry, X return higher than the market. That's 433% higher, by the way, if you were to look at that in percentage terms. 30-day average volume. I want lots of volume. I want lots of liquidity, so I do greater than 1 million. Current signal status. I want buy signals. Price change. I don't care about this. If you choose to, you can, of course. Market cap. I don't care about that either. I used to be a snob, Joe, and say I only want $20 stocks, but now I'm not quite. I'm still a snob, but only a $10 snob. Only a $10 snob. So anything $10 or greater. The fear and greed heat map is wide open. I'm not going to say any sort of cap on the fear and greed. I want to see the fear and greed heat map moving up. We talked about that. And I want to see the overlay indicator. This is your, hang on, I need to pull up another screen. Let's go to RPM. This is your, I'm going to have to run the screener again. Oh no, professional YouTuber at work. What this overlay is showing is your 10 EMA, your 20 EMA, and your 50 EMA. Now, looking at this stock right here, right, when it's red in the background, red, pink in the background, that means it's in a downtrend. When it's green in the background, that means it's in an uptrend. We make it far too easy for you, okay? There's no way you should look at this and be like, I don't know if it's trending up or down. It's obvious. So looking at RPM, it just started a uptrend, looks like in the last 2 candles, okay? That's what we're trying to show right here, the uptrend indicator. Now, when I run the screener, it comes back with several names, right? But I'm only looking at names within the last 5 days. Now, where is that? I know this is in the buy signal age. Yeah, yeah. I know it's in here somewhere. Hang on. Let me find it. 5 days. Five. Number five. No, 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 no. Joe, I don't know. I apparently I deleted that office slide at some point, but I'm looking for signals up to 5 days old. That's what I'm looking for. Now, everything that we talked about is everything right here, with the exception of price over the 10 EMA and price greater than $10, right? So everything in the white is the outlier 9. Everything in blue is some additional filtering that we add on to it for plan M. So taking this
Now,
a step further,
I noticed, Chris, at the top of that slide on the right, it said swing signals. Is that critical in this case?
yes, of course. Inside of Outlier, we have both swing signals and active signals. Active signals are more frequent, but they have a lower expectancy. So therefore, it gives you more opportunities. Swing signals are longer in duration, but they have a higher expectancy. Now, you can't have a buy active signal inside of a sell swing signal. So it's almost like a double confirmation, right? If it's a buy on swing, then it can have a buy on active. It doesn't mean that it will always will. But you can't have any sort of buy signal if it's inside of a swing signal. That's a sell. Does that make sense?
Yeah, that does make sense. Thanks.
You're welcome. All right, let's keep going. I'm using swing signals because that is how Plan M is built. Now, I want to take another step further, and we are going to here. We have a list: RPM, ECVT, KGC. I mean, quite a few to go through. Okay. So I've already done a lot of the legwork and I don't want to repeat the legwork. But what I'm going to do is I'm going to show you the stocks that I pulled out of this list, this exact list. I pulled a lot of them over here that would fit the 5-day-old rule. Now I'm looking at these and I'm saying, okay, are there any order blocks in our way? Let's see. Order block needs to be at least 2% away of any age. Okay. So what I'm trying to do is make sure that there are no order blocks in our way. Joe, let's discuss what an order block is real quick for those people who are not familiar. How would you describe what an order block is?
An order block is a mathematical representation of people who have held on to a bag, held on to some stocks or whatever asset is you're looking at, and they're afraid to tell their wife that the price went down. So when the price gets back to that price level, they're going to get rid of it and they're going to try to put their money into something else.
I like how you described it. They're afraid to tell their wife. So as soon as they get back to break even, they're going to get out of there. That's a really well described usage for that. I also want to take a minute and talk about the back testing, right? So we're getting into the materials sector. Now, the materials sector expectancy using the data over 7,000 trades was 2.43%. Overall outcome was 1,050. And that is because we had a decent number of total trades times your average trade percent gives you total outcome. Now, on average, on winning trades, they will go down on average half an ATR before they win. On average, they will go up 3 ATRs of winning. Joe, good gravy. Just think about this. Just think about this for a moment here. The winning trades on average go up 3 ATRs. Oh my good gravy.
That
And
sounds
then on
wonderful.
average, yeah, that's crazy talk. And then on average, the expectancy leads us at 2.235 ATRs from entry. So I just want to put that out there. Let's go through these quickly, look for any order blocks or anything in our way. So KGC looks great.
We've had some folks
PT,
out of the Alpha group hit those high ATRs too, Chris. I know our friend Mikey Mike was in, I think it was RF, and he just kept rolling it. We had our friend Ozzy Ian, he kept rolling gold. Like it feels good to be an outlier because you can catch these sorts of things.
exactly. Well said. CF. Okay, so this one has come down some, but it's still above the 50, but it does have 8% up to this order block right here. Now, again, you can get this exact same order block set up inside of our Discord. I've already shown you how. You do need access to Outlier, which is just 82 cents a day, and it's all the buy and sell signals that I'm going to be using in the US Investing Championship. NEM looking great, nothing in our way. MP. We do have an order block. It's quite a ways away. We really don't have to stress on MP. That is 31% away. Yeah, I'm not stressed on that. MOS, this is under the 50 EMA now, so I'm no longer interested because remember the trend template is a 10 over 20, price over 50. This now has price under 50. Don't want it. CTVA, let's look at this one. It's got about 6% to move. Actually, when I was looking a little bit ago, this was under the 10 EMA. Now it's over the 10 EMA. Let's go to ECVT, and this has about 4.7, let's call it 5-ish percent up to those order blocks. Okay, so now we've narrowed it down a little bit, taken off a couple that weren't set up for us. So now we need to start looking at the options chains because Plan M involves buying options. Now, hear me out. Joe, at this point, you don't have to take options, right? You can do everything that we're doing right now. Ozzy Ian, also competing in the US Investing Championship, is still rolling his gold and silver. Way to go, Ozzy Ian. He's going to beat me. That's my goal, is to see how many outliers can beat me in the US Investing Championship. But I'm not going to make it easy on you, okay? I'm not going to make it easy on you. Here's what we need to see when we're looking at options chains, okay? I like to start at 21 days to expiration. I want to see at least 250 on the open interest. I want to see less than 50 cents on the bid and ask spread. Now, both of these mean that it's liquid, so you'll have an easy time getting in as well as an easy time getting out. 30% is my absolute max on the extrinsic value of these trades. I like 20% or less, but I'll go up to 30% and no more than that. This is the uncertainty value that will decay over time. And I basically start at the 80 delta and then I move around. That's basically my wheelhouse where I live. So let's start at the top, Joe. Let's go to KGC. Now, the objective here is to see if there is any reason whatsoever to not take the trade. If we find any reason to not take the trade, we don't take it. But if we've done our analysis and we come out on the other side and we say, there was no reason not to take the trade, you are now obligated to take the trade. Obligated to take the trade if you're following your plan. Now, here's the thing, Joe. Here's the thing, Joe. Most people can't follow a plan. Most people can't follow a plan. They get 1 ounce of pressure and they panic sell, right? Panic selling is not part of the plan. Panic sell doesn't fall into the back testing on this. Panic selling is not included. No. FOMO buying into this great stock that you heard from a random guy on the internet does not fall into the plan whatsoever. It's having everything we talked about earlier, executing everything we talked about earlier, and then executing on the exit signals, which we'll talk about in a little bit. So we have quite a lot to do today, Joe. Let's keep going. Let's go to KGC. Now, what's actually cool about this, Joe, is I updated our little risk table over here so we can actually see option sizes and stuff like that right on there. But the entire portfolio manager is available forever down in the description below, as well as the PowerPoint, the exact PowerPoint document that I'm showing you right now. Well, not right now, but a minute ago, will be available down there forever. Now, Joe, the reason I'm doing this to show my entire portfolio as well as the entire plan right there is so you can be successful. Right? We're not putting it behind a paywall. We're not saying, take my masterclass. No, none of that. We want you to be successful. And then when you're successful, you'll become an outlier. It just makes perfect sense, right? That's our master plan. Our evil plan is to make you successful. Okay. I hope that's okay with everybody. Now, let's continue on with KGC. Now, I added this to our portfolio manager. Again, this is down below. In fact, just for speed and efficiency sake, let's go ahead. I nailed it down to these 4. These 4 we are going to put on in just a moment, saving a little bit of time to do all that. I did all the options liquidity work for you so you would know as well. Now, when I sum these together, Joe, this is how much percent of my portfolio I need to have available to take these trades. So if I sum this up, this comes out to 49%. So basically 50%. So what I need to do now.
How much would it be if you were just buying the stock outright, Chris?
I wonder. Let's see. It would be 293%, Joe.
Wow. That's tough to accomplish.
Yeah. I mean, once you understand the leverage and once you understand how to use the options, which we'll be going into options trading basics tomorrow in Outlier University. Once you understand how this works, why would you ever trade the stock? I mean, legitimately, why would you ever trade the stock when you can go with options and it's 50% versus 300%? So I need to sell off half of my SPXL position. So we're going to go over here. We're going to go send to ticket. I have 221 of these inside of the US Investing Championship right now. Quantity 221. What's that divided by 2? Math is very difficult for Chris Chains. Divided by 2, 110. Let's round it up. Let's make it a full 115. That way we don't have any extra or any issues right there. So we're going to do 112. I'm sorry, 115. Now we're selling out. So Joe, we're going to disappear. So we're going to sell out of this. So we're going to say 115 to sell. And I'm going to make this market because honestly, this is a super liquid stock. I don't have to worry about there being any liquidity here. So I'm going to hit quantity 115, market, sell. Should get filled. There we go. Working, filled at 115. Okay. So that should have released cash. I do want to double check this. Stock buying power. Yes. Excellent. Okay. Joe, I got to tell you, I was a little bit nervous about this because last Monday I had to call Tradier and be like, listen, I need you to release my margin. And so it looks like they've done it correctly. So we're good to go. So now we have $79,000 of stock buying power. $39,000 of option buying power is available right now. Okay, cool. That's more than enough. More than enough. So let's go into the options grid. Let's start at the top. Now, when I take my trades, I always start and work from the highest backtest down. So here, KGC, the outlier signal return shows 218%. That's a huge number, 218%. And so KGC, let's go see what Chris has already been cooking up here. So I went to the January 30th, options chain. And I looked for 250 open interest around the 80 delta. So a little bit less. This is over, so that's good. Okay. And then I went to the extrinsic value, 208, 2.08 divided by 730, which is the current price now, which is actually 28%. 28%. So a little expensive, but it's less than my 30% threshold. It just came down a little bit. And this is less than 50 cents wide. So now, Joe, I need to go buy this. Let me go over here. And I'm going to cancel this order. And then I'll show you that order in place. Okay. So I like to rest orders at a penny. That way I can keep track. Let's go to the options grid. This is not for MP. We want KGC. January 30th. There. And we're going for this one here at $30 strike. Now, my portfolio tracker shows an option size of 17. I saw in here it said an option size of 16. Maybe a little bit of rounding difference here and there, but we're going to go with what's in the portfolio manager at 17. So I'm going to go into Tradier and I'm going to buy 17 of these. And Joe and I are going to drop off 17 of these on the 30 strike and KGC on the January 30th expiration. Buy to open. It's 345, 350. I'll just make it 350. And let's see. Buy to open, filled with 17, average 350. So Joe, do me a favor, if you can, will you please start adding these into the Discord? So Joe's going to pop these into the Discord. If you have alerts set up on the Discord, you will get those alerts. Joe's going to notify everybody. And this is the 17 quantity KGC 30 strike on January 30th, filled at $3.50. Current price of KGC is 33.03. So let me go ahead and mark this real quick at 33.03. Because we're going to need that in just a couple of minutes. Opening 3303. Okay, cool. Let's move on to the next one. The next one, PPTA. PPTA. Let's go look at PPTA's options chain.
That was January 30th, right?
Correct. PPTA. Now I want to look at the stock itself. As you can see, looking great. No issues right there. Nice bullish trend. So looking at PPTA on the options chain, looks like earlier I came to the conclusion that 286 open interest, 50 cents extrinsic on 870 gives me 5% of extrinsic, so like nothing, at the 22.5. Now I want to modify this order since you've seen it now. I'm going to get how many orders? PPTA open 11. So if I come up here to my portfolio manager, you'll see 11 right there. I had 890 earlier. It's currently trading around how much? I don't know. 865, 870. So I might be able to get a little bit less. So let's, how if I do this? Oh, I don't want to do that. Okay. Let's do 870 to get filled and replace. So now we should have this filled here. Yes, filled. So I'm in PPTA, the 22.5 calls for February 20th. February 20th, Joe.
Mhm.
I bought a quantity of 11. The fill price was 865. 865 was the fill price on that. Current price of PPTA, which we're going to need in just a minute, and I'll show you why. Current price of PPTA is 3070. Mark that on. Now, remember, we don't have any expectations on these. No expectations on these whatsoever. Any one of these can be a loser. Because of that, we are always going to be looking to reduce our risk. Let's go next to NEM. NEM. Beautiful big gap up today.
Now, are you
NEM has
concerned
no,
at all about that gap, Chris?
nah. What's there to be concerned about?
Yeah, just asking for a new person.
No. If there's a gap in crap, which in fact, let's measure this. That is an exit signal on plan M. Gap in crap is at least 5%. Let's measure this. So you measure from the top of this candle to the close price, 3.61. We're not even going to include it in the gap and crap criteria.
Perfect.
I mean, Joe, what's there to be afraid of? This new all-time highs. This is bullish AF.
Yeah, let's go. 10's over
Bullish AF.
20.
All right. Let's go over to NEM's options chain. And it looks like I was looking on the January 30th. I saw 367, which is greater than 250 on open interest, 77 delta, and then the extrinsic value of $1.64 on 950. So 1.64 on 950 is 17%. That's great. I love that. And so I'm looking to buy how many? How many of these am I looking to buy, Joe? I don't even know. Like all of them? How about all? No, we're not going to buy all of them. We're only going to buy 5. We're going to have position sizing. We're going to understand that I have a consistent risk on all of these. So I'm going to buy 5. I go to my orders. You'll see NEM. You'll see a limit for 5. Let's change this to mid price. Looks around. Let's do 950. It's moving around a lot. Let's go replace. See if we can get filled. Not filled yet. Let's nickel it up to 555. Place it. NEM filled at 955. So I purchased the NEM January 30th 105 calls. Purchased 5 of them. Average price is 955. Got it, Joe?
Yeah, what's it trading at?
Let's go find out. 112.90. Let me mark on here. Opening 112.90. All right. So that's NEM. Let's continue on. It looks like I had one more, and that was MP. So MP, let's go look at the MP chart. MP has 30% up to this outlier block, so we're going to remove that. Tons of room up to the outlier block. So MP, got your 10 over 20, price over 50. All that looks good on the chart. Let's go into the MP option chain. Now, we have done a lot of work today, but we're not done. We need to understand once we have, after we put this trade on, Joe, we're going to talk about where to get out of these trades. Okay. Because it's so sexy. It's so fun. It's so exciting to put on new trades, right? No, it's not. It's boring AF. If you're doing it right, it's boring. If you're doing it wrong, it's exciting. So we need to actually go in and we need to put in where we're going to get out. Okay. We have a set of exit rules and we're going to follow those exit rules to a T. That was the point of having the exit rules to meet that expectancy. Elsewise, it's just, trust me, bro. Trust me, bro. Looking at the January 30th MP, looking over here on open interest, there's one that has a lot of open interest, and that's the 60 strike. Now, the extrinsic value of $1.95 on 710 gives me 27%. I can live with that. That sounds great. So Joe and I are going to drop off here. I'm going to adjust this, make sure I get the right screen. That was the wrong screen. The right one here. Make sure I have 6 of these. And then let's go back into here, into the orders, because I like to rest them at a penny. MP 6. Okay. So Joe, we're looking to trade the MP 60 calls, expired January 30th. And let's modify that order. Mid price is 715. I don't know. Let's try it. Let's see if we can get filled 715. Place. Filled at 715. Okay, so we're in the MP 60 calls, January 30th. I bought 6 of them for average price of $7.15. If I go over to my account view, I should see I got a little bit of cash left from the SPXL that we sold out, just a little bit of cash, but primarily split almost to the dollar between stocks and options. Between stocks and options. So let's go over into our portfolio. This is what we have right now. Take a screenshot if you want. SPXL, KGC, PPTA, NEM, and MP. Now, as fun as exciting as that is, we still have a lot of work to do. We still have a lot of work to do. So next, we need to go in and add on the charts our exit signals as well as our rolling points. Okay. So outlier sell signal, 1020 bearish cross, outlier block being hit, any earnings in the way, gap and craps, 2 ATR stop, and 3 ATR midday emergency exit. So what I'm going to do is very quickly take off the ones we didn't trade, which is these two. Okay, so let's start with KGC. KGC. Got a real handy tool over here from Deep Thought. Show hide current markup template. Now I can mark these up easy peasy. So I can just go on and add my half ATR roll point. And
This
then
is
my,
cheating, Chris. This is cheating.
I know, isn't it cool? My 1 ATR roll point. Deep Thought did some great work so I could do this easy. And then there. So I got my half, my 1, and my 2 rolling points. Now I've saved these as templates, which is why I can just like grip it and rip it on these.
If
So
folks
that's my
don't
2.
know where this indicator is, go to Discord, go to FAQ and member contributions, and you will see the deep thought indicator there. And there's also videos on our training channel on how to set it up. We walk through step by step. So you can tell Chris goes through this quickly because he's so good at it. But for us folks that like to learn a little bit slower, watch those training videos. They're really helpful.
That sounds good. Joe, look, this one's moved already a little bit on us, but that's okay. Even though it's moved a little bit, we can still use these lines. We can go a couple cents below or above if we need to. So this has gone about 20 cents above. So I'll make it just a smidge below these points.
Deep thought is the original AI. You're absolutely
That's right. That's correct. And we have them on staff. I like that. All right. And we'll do the same for the downside. Should be slightly below. And this.
There's
here.
lots of questions about strikes that you didn't pick. I'd recommend for anyone that has those questions, go to the slide deck, look at the orange slide. It identifies all the criteria that Chris goes through: extrinsic value, expiration, bid-ask spread, all those sorts of things, open interest. And if you practice that on your own, you can pretty well guess which ones Chris is going to be interested in.
That's true, right? And again, I am very fallible. I'm just a man, and all I'm doing is following my plan. Oh, it looks like I got some old notes on here when we traded MP earlier. Let me remove all that.
Alan, you've got a question about the KGC gap and crap. If you just rewind this video like 10 minutes, you'll get the whole explanation for that one.
There you go. Hey Joe, do me a favor. What price did we get MP? I don't remember what price we got it at.
$7.15 when trading 65.30.
65.30. Okay, thank you, sir.
You're welcome.
Oh, right at 65.30. Good. Okay.
A question here: how did Chris set those up so fast? He puts in resting orders, so he decides early on how many of each contract and which contract, which expiration, and all that, and puts an order in his broker, but
Correct.
sets it at a price that they will not actually fill. So he doesn't have to be making all these decisions when he's actually trading.
Exactly. Yeah, I've already made these decisions early on in the day. I'm just executing them at this point. Now, Joe, the not fun part, we got to fill out our spreadsheets. Okay. First off, we still hold how many shares of SPXL do we hold? 106. So we sold out, was it 150? Yeah, we sold out 115. So let's mark this out. Equals 106. 106 times current price of SPXL is 233.26. Okay. 223.26 plus what we've already closed, which was 115 shares at. I love the fact that we can do this live now. This makes my life so much easier right? To just show, okay, this is what we're doing. Like there's no obfuscation, there's no personal accounts. This is the outlier fund. This is exactly what we're trading. This makes me happy. 233.15. It probably makes our customers happy as well. Times 233.15. All right, so
So had
that's
enough. I do agree with you. It takes a while to document these trades, but it's so worth it. If you don't document your trades, it's going to be tough to back test them later. And also, you'll be able to see patterns of if you're a person that literally can't trade the signals in the plans. I think you might find if you document these enough, which of the signals that you're avoiding, and you might want to adjust your plan.
I agree, Joe. Hang on. I saw a slight change I want to make. 52%. So we sold out 52%. Now, later on, we'll go through. Once we reach a 0 point, we'll actually be able to see, okay, this is all the trades we got in. This is all the trades we got out. That's actually how I like to reconcile it. This is what we're doing in the meantime. We sold out 52%. We're still holding 40, let's call it 48%. There. So now we are up to date on our SPXL trade. 233.15. Amount received 228. That doesn't make sense. Hang on. What did I do wrong? It should be closer to 233. You know what? For now, for expedition's sake, let's just do that. 233.15. I don't want to keep y'all. I'll figure that out, that formula out later. Okay, so today is 112.26. Now, what I like to do is, because these are on the same sector, we're going to make this handy. Now, I saw a lot of people leave comments, which was really funny to me, Joe, because it's like clearly these people have no idea what they're doing, but all they want to do is copy Chris's trades from the Sunday video that did really well. They're like, I looked at your spreadsheet and it's really confusing. How can it already say that it's closed? I thought it was open. Bros, relax, okay? I want to keep track of my trades, but I also need to fill in the date. If it's green, that means it's open. Once it goes white, that means it's closed, okay? Just relax.
Yeah. And it's actually personal preference that you do that. I mean, I personally don't put the close in until it's actually closed. It's just, you can choose to do that or not choose to do that.
Completely up to you. Yeah. And remember, this is my spreadsheet. I'm choosing
Yeah.
to let you see it. I could choose
Yeah.
not to, but I would prefer to help you out instead of make you pay tens of thousands of dollars to watch my masterclass and then convince you that I'm such a genius that you need to follow everything that I do. No, I want you to actually come up with your own plan so you can be successful.
Yeah, use
Okay.
this as a foundation for a plan, right? I mean, you're getting signals from someone who's traded for at least 16 years, and that's a reasonable starting
17.
point, but that doesn't mean that you should run with this plan. You gotta make a plan that fits your lifestyle.
These are all
Uh,
M2.
Ray, if you actually go to Discord to our training section to the polls, you'll see a poll that I just put today that kind of walks through each of the common issues that cause stocks not to come up for you. In your case, perhaps it's the one that you didn't click load more on the bottom left of the screener. Remember, you can take trades back 5 days. So you're
Uh,
trying to get as many of the stocks on the trades stocks on the screener as will get you back 5 days.
Joe, can I just say it is so nice to do this with you because I'm over here doing work and you're answering people's questions. Bro, thank you so much. Everybody
Hey,
pay a
you're
little bit
welcome.
of respects to Joe. Joe is killing it. Joe is making all of our lives easier. Thank you, Joe.
You're welcome.
37. I'm just filling in my template here. Go ahead, Joe. Keep on going, my friend.
All right. I think I have accidentally unstarted, but there was someone who mentioned when they download the worksheet to Excel, it doesn't function. The worksheet is built in Google Sheets. And so if you just use it in Google Sheets, you will have far less issues. That's what I
I
would
agree with you
recommend.
on that. And what's cool is that you can take it everywhere with you at that point and you can modify it from your phone. It just makes life really, really easy to do it that way.
Yeah.
Okay, stock entry price on KGC was 3303. Entry price on Hey Joe, read these out for me. What were the entry price on PPTA?
Let's see. You paid $8.65 when trading at 30.70.
3070. All right, give me the details on KGC, please.
You paid 350 when trading at 3303.
Okay. Do me a favor. Can you read it in this order?
Yeah.
Stock price, options. No. Just read it out the whole way. That way I can get the option strike and everything in there as well, please, if you don't mind. And let's start at the top. Let's start at KGC. So KGC, what strike? What? I'm sorry, I'm making you
That
work.
was that was even more confusing. All right, what do you want? What do you want first?
Just read this whole thing for me.
All right.
So I can type it in.
All right, for KGC.
Yeah,
Okay. Let's see. January 30th, 30 calls for 350 when
yep,
trading at 3303.
got it.
All right.
Next, PPTA.
PPTA, you had February 20th, 2250 calls for 865 when trading at 3070.
Got it. What's next? NEM.
NEM,
Okay.
January 30th, 105 calls
Okay.
for $9.55 when trading at 112.90.
All right. Last MP.
Yep. January 30th, 60 calls
Okay.
for $7.15 when
Okay.
trading at 65.30. For anyone who wants to follow along with that, just go to Discord, go to USIC-outlier-trading room.
There you go. That's exactly the trades that I just put on. Now, Joe, we know where we're going to get in. We talked about our exit signals. Like, legitimately, there is a lot to do on the daily basis. But once you know what you're doing, it just flows, right? It just flows. You don't have to stress on it. We understand exactly what we're going to do here. This is the data that I like to keep track of. You can keep track of totally different things if you choose to, right? It's completely up to you. Joe, what questions do we have?
I think
I want to answer as
the
many questions as I can real quick, and then we'll jump out of here.
only other thing that I did that I didn't see you do is mention why I closed some plan ETF, just to
Mm,
keep a habit of
mm.
why I close trades. And if you want to do that, there's a blue section to the right of the spreadsheet where you can put that in.
Yes, which I highly encourage you to do so. Now, I drop that in here. I'll say, like, sell signal in place, whatever. You really want to keep track of why you exit. Because listen, when you look back at this 6 months from now, you're not going to remember why you got out of KGC. You're going to have no idea. Why did I get out of KGC? Oh, because I don't know. Let's think of best case scenario. It got a order block that was 10 years ahead of it that it ran into, right? Something like that. So you're like, okay, now I know exactly why I got out. Elsewise, the only reason you should get in is for the reasons we covered, right? For the reasons that it fit your plan. So you don't have to stress, oh, why did I get in? Well, it fit my plan. But now you got to answer, why did I get out? That's the real question. Okay, let's do this. Let's mark these to market real quick, and let's get out of here. Joe, do you remember what mark to market means? I thought you were a finance bro now, Joe. Joe, if you're gonna hang out as an outlier, you got to be a finance bro. You got to learn the lingo. Mark to market means we're gonna get the market price on these. That way we can update the spreadsheet and we can see how we're doing. Okay, so mark to market means what is the KGC price at this very moment? I don't know. Let's go over here to our portfolio. Let's look at KGC. Current price is 348. Okay, I'm down, or 350 right now. Cool. So I don't have to do anything. Next, let's mark to market PPTA. PPTA 890. Okay, small little winner there. Let's do NEM. This is annoying. Have to maximize it and close it and such. NEM 965. And then lastly, MP at 733. Now we can take a look over here and we can see our year-to-date return. Like, this was the point of filling all that in, all of our mark to market, so we could see the results right here, right? So now we are up on 6 trades right now. Like I say, I'm gonna go, I'll put a formula in here. You guys can check it out in a few minutes to make sure that I've got the average price going in correctly. And so this will change ever so slightly. But right now we're sitting on a 1.59% edge.
Nice.
1.59% edge. That's nice. Yeah.
Yeah.
Anytime it's positive, that's what you want, right?
Very cool.
Any other questions we got, Joe? Any other
Well,
questions?
we have a lot of questions around the screener. So I think maybe if we run through the screener one more time in the last few minutes we have,
Sure.
let's show that we selected a particular sector.
Hang on.
And
Let's do this.
have,
Let's reset. Let's reset.
okay, let's do it.
Let's reset. So this is clear. If you hit the reset filter, you're going to get in the same place as me. Okay. When you're done setting this up with me, hit save, and then it will go as a saved filter for you, just like that. And then you can modify it, etc. So then you only have to do it once and it's done. All right. So sector. In this case, because we already proved the material sector had the highest relative greed, that's the only sector I'm interested in. Okay. So the sector's already filtered down to materials. Industry, we're going to leave wide open. Outlier signal return will be positive only. Capital efficiency is going to be anything. I don't care. But we talked about what it is earlier. Average volume greater than 1 million because I want all the liquidity. Current signal status, buy signal. That way we're only looking at buy signals, right? Like here, because we cleared it off and I can see some sell signals and buy signals and even an outlier signal return on this one. That's not good, right? We don't want that. We want only the best. Price change, I'm going to leave it wide open. Market cap, I'm going to leave that wide open. For me, I have a $10 minimum filter, not 140, a $10 minimum filter. Fear and greed heat map value, we back tested and showed it doesn't matter what the fear and greed. It doesn't matter. I can't use that. Joe knows. I used to do the rock saying it doesn't matter what your feelings are, and we got copyright strike on that, so we can't say that anymore. We can say it, but we can't have the rock say it. Shut up, YouTube. YouTube is great in several ways, but also stupid in others. Heat map moving up. And then we're going to make sure it's only the uptrend indicator. Now, I did see Sean had a great point. When you make a change on any stock, if I change this from active signal to swing signal or swing to active and vice versa, it will apply globally. So the only thing you'll see here will be swing signals. The only thing you'll see here are active signals. If you make a change on one screen, it will apply to the screener. It'll apply to everything. Does that make sense?
Yep.
Okay, cool. So now if we hit apply filter, we should see the exact same trades that Chris saw earlier. There we go.
So let's go see where that load more button is at the bottom left, Chris. Way down on the bottom left. You got to scroll down there.
I don't have a load more button for this.
Interesting. Yeah. So when I do this, I sometimes will have a load more at the bottom left.
Oh, you know why, Joe? Because there's no more. That is all of them. That is everything that fits this criterias.
Okay. So now you would save it if you haven't already. But you'll have to keep in mind that you just chose only materials. So you would want to go back and change that to all, with the exception of healthcare, if you want to in the future. You threw me for a loop there. F that guy.
What? JoJo as Momo? I saved that as the screener. or was it when I said healthcare? F that guy.
Yeah, there you go. Healthcare.
Yeah.
So there you go. You've got all the tricks.
That sounds good. Joe, that is exactly how a professional investor invested half of his portfolio into 4 new trades and still kept the other half of it in SPXL. That's going to wrap it today. Joe, I think we have to meet here real quick. I'm going to get out of here, but I think we need to play the Chris Chain song out. Chris Chain song. I'm loving the Chris Chain song. If you are watching this on the replay, you don't get to enjoy the music, but the music is so much fun. So we're going to play the Chris Chain song out of here. Rick is so fun for doing this. But listen, if somebody were looking to save time, make money, start winning with less risk, what do you think they should do, Joe?
They should become an Outlier subscriber for 82 cents a day and then watch some of these videos.
That sounds incredibly cheap. And these videos are free too. Click to learn more. All right. You guys have a fantastic day.